Who's the next Warren Buffett? For decades, investors have searched for the new Oracle of Omaha. But what if the answer isn't a legendary stock picker at all? What if it's artificial intelligence? AI now scans balance sheets, tracks global news in seconds, and trades at lightning speed. Some people are already calling it the future investing. But here's the big question. Can AI actually make you rich? Or is it just another Wall Street hype machine? The rise of AI in finance. Let's start with adoption. Today, around 70 to 75% of U.S. market trading volume is algorithmic or AI-assisted. 10 years ago, that figure was closer to 50%. Hedge funds and big banks lean on AI for everything from spotting arbitrage opportunities to detecting risks. And now those tools are trickling down to everyday investors through robo-advisors and apps. We've seen an explosive growth in robo-advisors like Betterment, Wealthfront, and Vanguard's digital advisor. U.S. robo-assets are expected to top $1.1 trillion by 2027. That's some serious momentum, and it shows how mainstream AI-driven investing has become. Performance. Is AI beating the market? Here's where things get interesting. Wall Street has experimented with AI-powered ETFs like the AI-powered equity ETF, which uses IBM Watson to pick stocks. Sounds futuristic, right? But since launching in 2017, the ETF has underperformed the S&P 500 almost every single year. Another AI ETF launched in 2023, and so far its track record hasn't been much better. Meanwhile, the S&P 500 has returned 19+% in 2023 alone. So the cold truth, AI funds haven't proven they can consistently beat the market. And that's exactly what Warren Buffett has always warned about. Most active strategies, whether human or machine, struggle to outperform a simple index fund over time. Where does AI shine? In fact, it excels in areas retail investors often struggle with. AI can process mountains of earning data, track global sentiment by analyzing social media and news, build portfolios that automatically rebalance as the market moves. These tools help everyday investors avoid emotional mistakes. In many ways, robo-advisors are democratizing access to the same kind of sophisticated analysis hedge funds had for years. Let's not forget about the risks. AI investing has pitfalls. There's the black box problem. So many algorithms don't explain why they make certain decisions. This lack of transparency makes it hard to trust them blindly. It's like getting an answer and not knowing why you got that answer. Additionally, there are volatility risks. We've seen AI contribute to sudden flash crashes. This is where algorithms react to others and it sends the market spiraling. Additionally, there are regulatory concerns. SEC Chair Gary Gensler has warned that unchecked AI could concentrate risks and trigger new kinds of financial crises. And then there's the human irrationality. AI is great at crunching numbers, but it still struggles to account for fear, greed, and black swan events. Things Buffett himself has always warned about. So how do you find a good robo-advisor? For retail investors, here are 3 things to look for. Transparency. The best robo-advisors clearly explain their strategy, whether it's index tracking, tax loss harvesting, or rebalancing. Costs. Buffett has always said, fees kill returns. Look for low annual fees, ideally around 25 bips or less. Benchmarks. Compare performance to the S&P 500 or a 60-40 stock bond portfolio. If a robo-advisor can't keep up, it's not worth your time. Takeaways. So is AI the next Warren Buffett? Probably not. Buffett's edge has always been understanding businesses, spotting moats, and staying patient. Qualities AI still can't master. But here's the real opportunity. AI doesn't need to be the next Warren Buffett to change your investing journey. It can keep you disciplined, lower your costs, and give you access to smarter tools once reserved for Wall Street. Buffett himself probably would say, seduced by the hype. Use AI where it helps, avoid unnecessary fees, and never forget the fundamentals. Because in the end, investing isn't about finding the next Buffett. It's about sticking to the timeless principles, whether the tools are human or machine. If you liked this video and you helped, be sure to like and subscribe. It certainly helps the channel.